On Friday, August 2nd, 2024, the United States had its biggest decline in the stock market since March 16 of 2020. That sounds alarming, right? It is, but it isn't. I'll leave it to your favorite YouTuber to explain in half an hour what exactly happened in Japan, which led to this huge sell-off. What I'm here to talk about today is how it affects your personal finances. Should you make any of your financial decisions based on what happened in the market that day? And the obvious answer is no. Unless this market sell-off caused you to lose your job, this really has minimum impact in your personal finances. Video over. Thank you guys for watching. No, I'm kidding. I'm really here to talk about investing philosophy. For example, my philosophy is that I am a long-term investor. I'm going to invest my money in something like an Roth IRA where I'll be able to expect to get a return on my investment of 7% on average every single year. And by the time I retire, I'll be a millionaire. On Friday, August 2nd, I log into my Vanguard account. I plop down right here on the sofa, right next to this hard hat. You can probably see the hard hat right there, right next to that hard hat. And I log into my Vanguard account. From there, I saw a slightly alarming message. Never before have I seen a warning that says high market volatility and it be a good thing. The market is typically not rocketing in new highs when that comes up. I knew something was up, so I decided to open up the stocks app just to see, what was going on. And I saw a lot of red. So here's what I did. By Monday, the stock market wasn't looking any better, but I invested the money anyway. That's because I'm following my own personal finance philosophy using dollar cost averaging. Pay attention, dollar cost averaging is a term that's going to make you seem smart to your investor friends, but it really just refers to investing regular amounts of money over time rather than investing all your money in a fund at once. With dollar cost averaging, it really doesn't matter what the market is doing. You're investing your money either way, because we know over time that our money is expected to grow on average 7% every single year. But what's important is that we don't try to time the market. To prove that dollar cost averaging is probably the best idea, let's look at a few charts. Here you can see what the S&P 500 looked like on August the 2nd. This is what it looked like for the week of August the 2nd. This is what it looked like for the month, and it's all red. But now let's zoom out a little bit more. It's 3 months. We've got some positive. It's moving in a positive direction. Let's look at it for 6 months. Oh wow, that's a huge gap. 1 year, even bigger. The S&P 500 is in much better shape than it was 5 years ago. You can even see the drop in 2020 when COVID happened. And even despite the loss that you saw on August the 2nd, it's barely even noticeable from here. I'll even zoom out to 10 years and you see a huge gulf between where the S&P 500 was in 2014 versus where it is today. I'll do the same for NASDAQ. You see today, August the 2nd, 1 week ago, still red, 1 month ago, because obviously the market is a little bit lower than it was a month ago. And just like the S&P 500, look at it, 3 months now. It looks like it's very close to wiping out about 2 months worth of gains, but that's okay. We're still moving in a positive direction. In 6 months, it looks like mountains here now. You see you're going up the mountain and then it's on the way down, but then we zoom out again for a year. You still see that from January to July, we're still up. And if we go a full year, we did year to date on the last one. If we do a full year, you can see that, man, we've made major improvements since this time last year. We'll do 5 years, even better. 10 years, it's not even close. All right, last one, we'll do it for the Dow Jones. Just like the other ones, went the same day, today, August the 2nd, it's not looking so hot. A week ago, it's not looking hot. What do you think about what's gonna happen for a month? Of course, it's gonna be red. Oh, nope, it's green. This one is actually green. So actually the Dow Jones is up. Even though, we've had this big drop, it's still up on the month. And then 3 months, it's up even higher. 6 months, you see it. Year to date, it's still good. 1 year, we're looking really good. 5 years, It's not as big as a gap as the other ones, but it's still very good. And 10 years, just like all the other ones, not even close. What's crazy is even with the 2% drop, the S&P 500 was still near its 5-year high. We just had a bad weekend, honestly. My initial investment amount was finally able to go through on August the 5th. I invested at a bit of a discount. If this were to ever happen in the future, and I say if, it's when this happens in the future, because these things happen every now and again, the best thing that you can do is stick to the same plan that you had originally and move on with your life. As long as you don't lose your job, there's not really too many changes that you're going to have to make. So no panic selling, no getting greedy and trying to buy extra. Just stick to the plan that you already had. As you can probably tell, my philosophy for my personal finances sort of mirror my personal finances for this YouTube channel. This video could have come out a week ago when the sky was falling and people were really afraid of what all the volatility in the market meant. I mostly try to stay away from doing short-term personal finance videos like this one, because even next week, this crash is going to be as impactful to you as March 16 of 2020 or 2008 or 2000. I promise this is the last time I'm gonna say it. Stick to your plan. That's why last week I released a fun video about knowing where you are in your personal finance journey and some of the steps that you can take to take you to the next level. You can find it right here, and I hope to see you there. In today's video, you learned about dollar cost averaging to make yourself sound smart, and more importantly, you learned about your investing philosophy. So no matter how the market moves, you can be financially prepared for the future. Hopefully you can apply these concepts to your life so you can be one step closer to using money to live the life that you want to live.